Welcome into my Vanguard portfolio update now for the month of October. Can't believe we just got a couple more left until the end of this year. I'm back from my nice California road trip. Lots of amazing national parks, lots of nice coastline. Now, if someone can get me a nice big house in California, that would be great. But until then, we've got to pay the bills. Anyway, we'll jump straight into the news before we go into the portfolio update itself. As usual, then we'll start off in the US markets, in the biggest market in the world. Let's have a look now at the S&P 500. Now, as you can see on screen, the S&P 500 is up nearly 4% this month, which is an enormous performance. And during this month, the S&P 500 has hit a brand new all-time high. Right now, it's slightly lower than that, but yet again, the market keeps hitting these new all-time highs. I'm not sure how many times I've said that during these portfolio updates over the past year, but you'd be quite drunk if you played a drinking game with me saying that word. Now, just quickly looking at some of the winners of the last month, it's actually a bit of a mixed bag, which I think is actually quite a positive thing. Just have a look here now, some of the larger companies in the market who have performed well in the last month. You've got companies like JD.com, United Airlines, Constellation Energy, and even Reddit leading the way. So that's banks, Chinese stocks have done particularly well. Not just your big AI stocks and Magnificent Seven that have led the way for most of the past couple of years with the big AI boom. Now, as I said, I think that shows a relatively positive thing rather than just having one single sector of the market leading all those gains. Shows a relatively strong consumer and other areas of the market taking their turn to be at the front does show overall, in my view at least, a pretty healthy economy and a strong US market. Now, in my last update video, we did cover the big news story over in the US with the US Federal Reserve cutting interest rates by 50 basis points or 0.5%. Now, this was quite a bit of a shock to the system. The markets were expecting a bit of a smaller cut to rates. But then when this hit the market, we did see them rally quite significantly. Now, at the moment, you could argue that we are having the soft landing that lots of people expected that we may or may not have. And whether a recession is ahead is another one of those things that personally, I don't spend too much time worrying about. Anytime we get any kind of bad news at the moment, there certainly seems to be a bit of a jittery and kind of jitters in the market, certainly. I personally don't spend any time thinking about that, and I certainly don't let that affect any of my investing decisions. But I worry that a lot of people do, and it's certainly something that will continue to worry investors significantly, I think forever, to be honest. Now, while we're talking about interest rates, we also need to look at inflation. Now, US inflation data, just like we'll move on into the UK in just a moment, came in quite low in the most recent data. As you can see here, inflation fell to 2.4% as the headline number. Now, for the rest of the year, the expectations are that that federal funds rate will end up the year around that 4.5% mark. And then in 2025, they expect things, at least the kind of betting markets out there, expect things to go around the 3.5% mark. Looking out that far ahead, though, as anyone will know, is that really is anyone's guess. There's no way to know if that will absolutely happen. But I think with reasonable expectations are that rates are going to go in one direction for now. They're going to be cut kind of steadily for the rest of the year and into next year, both in the US and in the UK, as we'll speak about in a moment. Now, a couple of other notable stories that have affected the US market. Now, if you have a look at ASML, which is actually a European tech firm who sells machines that create chips, they had a bit of a rough earnings. They're dropping almost 20% in a single day, which actually brought a lot of those other tech names down with it who were based over in the US. Let me just give you a quote here, 1 second. The stock came under pressure early this year after the US government announced it was looking to implement more strict trade restrictions on companies that sell advanced technology to China, which extended both US companies to firms that do a business in the US. Now, you saw Nvidia dropping almost 5% in a movement with that news, but has since bounced back. Now, TSMC, another major chip firm, which is headquartered over in Taiwan, had some great earnings, as you can see here, and that saw its stock boosted, which helped kind of rise the rest of those markets. As I mentioned earlier, there's a lot of fear in the market still, I think, with all of these big companies who are investing in or part of the kind of AI boom that's going on at the moment. Lots and lots of companies are spending a huge amount of money with the likes of Nvidia, and there is concern there that all of this money kind of won't end up in actually giving people profit. So they're spending huge amounts of money investing in all of this infrastructure and these chips. But until those chips and infrastructure actually kind of produce some profit, and we see some real benefits from AI, I think that there is some kind of jitters in the market until that happens. I think AI, just like the internet, is going to be a huge and have a huge impact on the economy and on society. The big question really is how long will it take and when will it kind of happen, if you like, and also which companies will benefit. as the companies today who are kind of leading the way may or may not be the leaders of tomorrow, just like you saw back during the kind of dot-com craze, which ended up in a bit of a bubble and a bit of a crazy ride for the stock market. The internet was the future, but the timing was slightly incorrect. And lots of the companies who were kind of leading the way and thought they might be still leaders today were the ones who ended up bust. So it would be very interesting over the next 10 or 20 years, even the next few years, of what happens in this space. Finally, I think it's worth mentioning the Tesla Big 1010 We Robot Day that took place over in Warner Brothers Studio. Elon Musk took to the stage and unveiled a couple of new products. You had the Robo Taxi and you also had the Robo Van, which you'd like to just mispronounce and call very strange names. Two very interesting products. The market didn't react too well to those. Quite a big sell-off, a big sell the new style of event. Personally, I wasn't too impressed by this event. I think it feels very much like a lot of vaporware at the moment. It's the kind of Robo-Cab, just a two-seater. The painted rims felt like a very unfinished product that is going to be a long way away from ever really seeing the streets and taking kind of paid customers at this moment. You also have the Robo Van, which has no windows and is struggling, will never get over a speed bump. I'm highly skeptical that anything like this will ever hit the roads. But hey, I could be wrong. There's an enormous amount of money riding on this company with way too many people, in my view, going all in on single stocks, which I think is a completely toxic and close to financial manslaughter as you can get. Going all in on any single company is extremely dangerous, and expecting 1,000x returns based on a future that doesn't exist yet, I personally think is very dangerous indeed. But something to let me know about. If you agree or disagree, let me know in the comment section. And also, feel free to come and join me on my Discord community. I'll leave a link in the description below. Always keen to get other people's views and opinions on this kind of company and others, and what about you're doing with your own investing. Now, a quick trip on UK markets before we go into the portfolio itself. Let me just show you now what the FTSE 100 has been doing. You can see here that the FTSE 100 had a pretty decent month, actually. Not too far away from those all-time highs, but they were set all the way back at the start of the year. Now, it's always important to remember that the FTSE 100 doesn't necessarily represent the UK economy, because lots of these companies are generating around 70% of their income outside of the US, but it still is headquartered in the UK. So it kind of is used as a bit of a benchmark that people do like to bring up. Now, let me just quote you here with a couple of news articles that came out. As we see, the ONS has released some retail sales data showing that they're actually better than expected this month. Let me quote you now from PwC. They said, what September's retail sales tells us is that while there is somewhat of a recovery since the bounce back in consumer sentiment directly after the general election, this improvement remains fragile and unbalanced, with uneven performance from one sector of retail to another. Better weather and discounting has helped invigorate sales in some categories, while there is still nervousness around larger household purchases. That's quite an interesting one there. So UK consumers are spending money, but it's not necessarily across all different sectors, and they're being a bit of picking and choosing with some kind of things that they're actually spending out there in the shops. Now, jumping over to kind of inflation data and interest rates here in the UK, let me just show you, you may have seen inflation data coming now below the 2% level, at least for CPI, which is the preferred measure targeted by the Bank of England. What this does is open the door for the Bank of England to also keep reducing those interest rates. Now, the expectation at the moment is the bank will reduce their interest rates by another 25 basis points when they have their next meeting, which is on November the 7th. This will then take rates down from 5% where they are now to 4.75%. Now, all of this links back to a very critical date, which you need to get in your diary. That is October the 30th, when the UK have their next budget. That happens at 12:30 p.m. Now, I'm actually going to be covering the budget live, but it's going to be over on my Discord community. So again, if you do want to join in, make sure you have a look at the link in the description below. So I'm going to stream that there live. I'm also going to try and release a video on the same day. And no doubt there's also going to be future videos, because I think this budget is going to have a huge amount of detail in all kinds of investments, pensions, who knows, capital gains tax and other kind of taxes that will affect investors and non-investors alike. So I'm going to cover that in quite a lot of detail, but I will get an initial video out on the same day, fingers crossed, if I can actually edit a video quick enough. I haven't made any kind of speculating videos just yet on what could be in that budget. I think there's plenty of good content out there. Especially, I enjoy watching videos from the IFS, who make some exceptional content on options that Rachel Reeves has to actually kind of negotiate in that budget coming up. The big issue is not taxing things like income tax and VAT, which kind of leaves you with those smaller taxes. So I think we're all going to be very interested to see the outcome of that. So keep your eyes peeled, and I'll see you over on the community as well. Okay, time to jump over in the portfolio itself. And I think we're near some all-time highs, but where we should be also with the contributions that have gone into the account. Now, as a quick refresher for those of you who might be newer or not followed my portfolio updates for some time, on my Vanguard account, I pretty much just now have my self-invested personal pension. There is a small amount of money which is still left in my ISA account, unfortunately. I did ask Vanguard to move this, but I'll have to message them again on that one. My other ISAs are over on Trading 212 and InvestEngine, which you can follow along with. I do keep my Trading 212 just private for myself, but the InvestEngine one is also another portfolio update that you can follow along. So my Vanguard account is just for my self-invested personal pension. That's all personal pensions that I've had in previous workplaces, and is also the current pension that I'm contributing to from my own limited company, which is the main source of funds at the moment. So you can see the value at the moment is over £57,000, and I am adding to that month on at the moment. As you can see here, if I just go into the pension, you can see so far in this tax year, I've contributed £3,000 from my company directly. What's quite nice with the Vanguard pension, the self-invested personal pension, is that I can actually make contributions from various positions. I could make them from myself personally or from my own company, and that will affect how you kind of get tax relief. Directly from my company, you do get tax relief on any pension contributions because it's an allowable business expense. You don't get any money on top because you're already getting that relief when putting money in from the company. I probably will do at some point more detailed videos about not only investing from a business, but contributing to pensions and other investments from businesses as well, because I think that's quite an interesting topic. There'll be a lot less viewers for that, but I will get around to doing that one. But let me know in the comment section if you want to see that kind of thing. Now, just have a look here in terms of the transactions and investments that I've put into the account. If I have a look here on the transactions tab, you can see that I've just put my usual. Around the start of the month, I'll put kind of £500 in from my company, and they'll just buy whatever they can wherever the market is at that point. In terms of the investment that I buy, it's very simple, and many of you will be very familiar with it now. It is a single global index fund. That's a FTSE Global All Cap Index Fund, and it's the accumulation version. Very, very simply, I don't look at any markets. I just completely dollar cost average, and I'll invest every single month into this fund. This fund tracks pretty much the entire global stock market with not only the mega cap companies, but also some of the smaller ones too in virtually every country in the world. So if the stock market goes up, I get to benefit, and that's really the end of that. And I rarely even log into this account. The only time I really log into this account is to kind of look at it now and do this review with you here. But just because the market is at an all-time high, does that mean I don't invest? Absolutely not. I will continue to invest regardless of whether the market hits new all-time highs or whether it doesn't or not. The market hitting all-time highs is a feature of the market, not a bug. And you better get used to it if you want to be an investor. Not only having market crashes and corrections, but all-time highs, because these are a feature of the market that you need to get used to. Now, just having a look here on the long-time performance graph, you can hear that see that we should be at an all-time high, not only because of the performance, but because I have put more money in it. And don't forget that the biggest kind of sum of your returns is going to be based on what money you can put in. So there's no putting in £100 and ending up with £1 million unless you get really lucky somehow. Investing, the biggest part of it really is how much you can put in and how long you can put in over a really long period of time. So as you can see, by doing this and actually kind of practicing what I preach, you can see I have a steady upwards trend as the market has kind of gone on that direction as well, but I've also put more money in, and that's just really, really important to note. Just have a look here month by month there. You can see how those actually kind of affects the market, and also don't forget about fees, how they play an effect on your investings too. You can see the cumulative returns here at the highest point I believe they have ever been, as the market's had a pretty good time. They've also continued to put money in. Remember that although everything's kind of green and nice at the moment, you can follow my portfolio updates from when we had a very terrible year, especially back in 2022. And again, I practice what I preach, and I invested every single month, regardless of what happened in the market. Not all of this was actually into my pension, but this was across all of my other investments too, because my pension wasn't really contributed to, not a huge amount, until I actually want to get started putting more money in from my own company. But I practice what I preach, and I make sure that I actually do and just dollar cost average very simply into a low cost mutual fund. You are absolutely free to try and invest and time the market however you want, but I truly believe, and not only from my perspective, but Many people will just tell you that it's a fool's game trying to do that, but that won't stop people from consistently trying and always asking me all the time. One of the biggest questions that I do get asked is this a good time to invest? And the answer will always be yes. If you are a long-term investor, the best time will always be now. It will always be now. Doesn't matter what the market's doing. Doesn't matter. We don't know the future. We don't know what the next few decades are going to hold. If you're a long-term investor, the best thing you can do is start. It doesn't matter if you're 100 or 200 pounds you put in now, suddenly times at the worst time, because that's not going to be the only money you invest. If you consistently do that time and time again over a long period of time, you get the returns of the market if you invest this way and don't try and time the market. But like I said, people will continue to time the market, but I'm going to keep along with you for the journey and make sure that I show you what this kind of boring long journey looks like. Now, don't forget, if you do want to get started investing, I will leave the links to the platforms that I use in the description below. You can get some free money and some free shares, making sure you sign up and deposit. There are terms and conditions that do apply, so please make sure you read those. Get yourself started with those if you also want to get yourself set up with a stocks and shares ISA or a pension, or even get yourself a business investing account as well. On that note, guys, I will see you in the next video, and as always, happy investing.